Hello traders and welcome back to another market breakdown. Today I'm going to be speaking about the SP 500 and there's a major signal has been alerted and we should be paying attention to it. And then I'm going to share my opinion about the stock market and how I'm going to navigate it, and everything is going to be if then is like an algorithm. Okay. So the signal I'm going to be speaking about is the yield curve. So the yield curve has been inverted this month, as you can see here. So by the close of this month is going to confirm the inversion, and every time that the yield curve has been inverted, there has been a recession following in the next years, either 1 year, either straightforward, either few months, either 6 months and 18 months. It doesn't. Okay, so that's a 100 signal that a recession is coming, and then we need to be prepared for it. Okay, and I have drawn here some instances or examples just to show the cases. For example, we're looking on the monthly chart, okay, and this was the crash of. I don't like to use the word crash, but anyways, I'm gonna use it. But this was the drop or the pullback, or you can call it a bear market, okay, because this is a bear market on the monthly chart. But if you look on another chart, maybe the yearly, this is just a pullback and continuation and maybe just a range. Okay. This called this a bear market, and we had an instance there of an inversion in the yield curve. It started trading above zero, and then we started a bear market. And that drop probably was around 50%, if I remember correctly. Okay. It's around 50% drop, as you can see. Another drop happened in here, also around 50%. Made this one more severe because it was around 58, if I remember, around 60, 57, but it doesn't really matter. Okay. And if you notice here, whenever we have the trend line and we break it, we tend to enter a bear market. Whenever I have that trend line and we break it, we enter into a into a bear market. Okay. And here's the inversion. Here's the inversion. Also, there was one before in 2019. That was still fresh in the COVID crash. Okay. However, this one, the market keeps running few months, 1, 2, 3, 4, 5, 6 months before dropping in this instance here. Okay. And then we entered into this drop that probably that was maybe, I don't remember correctly, but it was around 35% drop. This is not a bear market, but this is a, maybe if you go to the weekly, you're going to see a bear market, but on the monthly, this is just a drop. It's not a bear market. It's just a one leg. A bear market is considered with many legs. And now we are flashing another signal here. Okay, so therefore we need to be cautious. We need to be very aware when we going to be investors in 2025, or are we going to be just traders trying to put money in, money out, money in, money out in the markets? So this is a great signal, and if we gonna come up, probably it's gonna start a recession and coming into the next years. And now I'm gonna put this down. I'm gonna tell you my opinion. Okay, as you see it, because I don't only look at one indicator. So this is one of the indicators I'm looking at. One of other indicators, I look at the time cycles. I look at many things. Okay, and we are in the post-election year cycle. So there's the election cycle. This is playing around in the stock market for a while now, and this is the election year, which has been very bullish. This one, and the year before the election also is a bullish, and the year post the election also considered a bullish year. Okay, however, how far can we go? I have no idea. No one have any idea because we are trading in no man no man land. Okay, no man's land, which means we have nothing above. Okay, it just keeps going up until the music stops. However, if the music doesn't stop, we're gonna keep playing the music until it stops. That's the way I view things. Okay. And if you see here, I have drawn a trend line, and that trend line is going to give me a trigger to be worried. Okay, so if you go to the daily, the trend line is going to look more clean. Okay, more clean. I don't want to see if keep. I'm going to keep the bullish bias. If you see here, I have a plan. So that's a plan. Sometimes when I am preparing, I do some time analysis. I do a lot of things, and I prepare and I wait and I wait for a swing. Okay, because I'm right now I don't have money on the stock market as an investment. However, I put money and I get it out. I put money and I get it out. Just the way I do it. Okay. For example, I bought here on the stock market, but as an investment, it wasn't a swing trade because I didn't know if the price is going to keep rolling down. This was one leg, second leg, and then continuation. And probably, I assume probably we're going to have something similar. This is one leg, and then maybe a second leg, and then continuation. Okay, that's if I have to be so genius about it. But I don't think I am genius. I just follow a strategy and see if it's going to work at this time or doesn't work. And I follow a very strict risk and management. And that's the only way I make money in the stock market or forex or whatever it is. Okay, as a trader. If you see here, I draw on a zone. That zone can be bigger, can be smaller because it doesn't really matter. I just place it there where I expect probably a bottom can happen. It doesn't have to drop there. Okay, it just this is gonna give me a closer place where I'm gonna base my invalidation or a stop loss. Plus, we have a moving average there on the weekly. If you can see, whenever we come and touch this, we come up. So there's another confluence there around that moving average. So maybe if we come there and we touch it again, it gives us the trigger plan, then we should be buyers. That's my opinion. And I think the stock market probably is destined to go to 6,500 at some point. However, if we break below this trend line, I have to change my mind and be very cautious. Okay. If you notice, the way I'm speaking and very, very, very precise, if we break below this, I'm going to be super cautious because we have an inversion in the yield curve, which after that follows a recession. We don't know when the recession is going to happen. However, based on my time cycle, it says that we need to be bullish until proven otherwise. Okay, I hope that's clear. So this plan is based on invalidation if we break below this trend line. Okay, take care, and I hope you find this useful. And I will see you with your. Probably I'm gonna do Bitcoin before I close this, and then I'm gonna be that's it. Because I'm right currently I'm in a holiday. I'm not trading at all. This drop happened. I wasn't trading, but traders they see things like this and they think it's related to a news alert or power speech because of that. That's not the way I see it. The way I see it, there is a lot of traders, and this is the last month of the year. Some of them like to take profits on the stock markets because this was a good year for them and they do their taxes, okay, to pay their taxes. And then once they do that, sometimes they get back into the market again in the next month, okay. That's how investors do this, and that's how I view this. I don't think this happened because just Powell said something about rates cuts or something, okay. That's not how it works in the stock market. Okay, let me keep this here. This is a regression channel, and we will see if we're gonna keep it in. Okay.